Thank you for joining us today during Small Business Week. I'm Elisa McCain, the Executive Director of Texas Accountants and Lawyers for the Arts. Welcome to our seminar on record keeping for creatives. Today's seminar is generously supported by the Cultural Arts Division at the City of Austin and is being presented as part of Austin's programming for Small Business Week. TALA also receives support from Texas Commission on the Arts, the National Endowment for the Arts, the Texas Bar Foundation, and other generous donors that make programs like this possible. The City of Austin has put together many other educational opportunities during Small Business Week, and you don't have to be in Austin to take advantage of these webinars. So if you're joining us for outside of the Austin area, you can go to smallbizaustin, smallbizaustin.org and find more information about seminars that are happening for the rest of the week. At 6 p.m. tonight, TALA is presenting a second seminar for today covering information about obtaining a patent from the United States Patent and Trademark Office. If you're an inventor and need more information about the patent process, please consider joining us at 6 p.m. Both seminars will be available on TALA's YouTube channel for viewing at your convenience after tonight's seminar at 6 p.m. This seminar in particular on record keeping was developed in response to the work that TALA has done since the pandemic began to assist creative workers to apply for relief aid. We hope that you find this information useful as you organize your business records to be more easily accessible for tax purposes, for grant and relief aid applications, and to generally reflect on the bigger picture of maintaining and expanding your business and increasing revenue. If you are logged into your personal YouTube channel, you'll be able to ask questions in writing using the chat feature. We'll attempt to answer as many questions as possible after the presentation. Today's presenter, CPA Lisa Sretenovic, has counseled hundreds of artists through TALA and her own practice, where she focuses on business coaching with an emphasis on the creative sector. Let's get started. Lisa?
Hello. My name is Lisa, and I am the Velocity Detective. I am a CPA and a volunteer with Texas Accountants and Lawyers for the Arts. And today we're going to talk about record keeping, bookkeeping. How exciting is that? Okay, maybe not as much as one would think, but once you get done with this webinar, maybe you'll get a little bit more excited about it. One of the things to keep in mind is whether or not what you have is actually a business or it's just a hobby. Remember that if you are really in this to make a profit, then you most likely actually do have a business. And by golly, if you have a business, you should look and act like one. So what does that mean, right? Well, the IRS has 9 different ways that it determines whether or not you are a business or just a hobby. And maybe you're wondering, well, why is that important? Well, when you exchange goods or services for compensation with the intention to make a profit, then you are in business and you can take certain deductions that somebody that has just a hobby are not allowed to take on their tax return. Now, if you have a hobby and somebody wants to pay you for that good or service, you still have to claim that income on your tax return at the end of the year. But if you don't have these deductions to take into consideration, then you're going to pay tax on that gross dollar amount instead of being able to deduct things like how much it costs to make that piece of art, how much advertising it took for you to get that out there so that other people would be really excited about your art or your music. These things, in addition to things like the home office deduction or utilizing your cell phone as part of your expenses, when you don't look and act like a business and you are just a hobby, then you don't get to take those. with the exception, there are some exceptions of things that you can take as a hobby, but in order to be able to take those deductions, you have to be able to itemize. And most of us don't actually fall into the category of being able to itemize, which means that you're going to pay tax on that full amount. If your real intention is to have a business, and I want you to have a business, because I want art in my life and in my cities and in my state. So let's make sure that we are able to go from starving artist to financially sound. And one of the ways to do that is to conduct ourselves in a business-like manner. And one of the best ways to do that is to keep accurate books and records. That is the very first line item that the IRS brings out to say, hey, are you looking like a business? And again, it's the exchange of goods or services. That would be like if you were a painter, that would be your art. If you were a musician, then when you go play in a live, wait a minute, we're still a little bit in COVID, but that's coming back, right? So in a live event where you get paid for that service, or maybe you're that musician and you've got an actual CD. Wow, those still exist, they do. Or even better yet, maybe a vinyl. And you sell that for the exchange, again, of goods or services for compensation. That's usually money, dollars, with the intention to make a profit. Now that intention says, I know that I can sell you this CD for $18.99, and it cost me $4.99 to make it. That means I'm going to have a profit of $18.99 minus $4.99, $14, right? That would be my profit. The IRS has a presumption that if you have carried on your business, now remember that you have to act and look like a business, then if you've done this for 3 out of the last 5 years and you've actually made a profit, then whether or not you classify yourself as a hobby or a business, the IRS presumes because you have made a profit that you actually are making a profit. Now, one might question, but I just started. It's going to take me a little bit of time to get my name out there. I'm spending some money to build a website. I'm spending some money maybe on dues to Texas Accountants and Lawyers for the Arts because I know that they're going to help me build this business. And I can get some education through them. Maybe you've gone to the city of Austin and utilize some of their resources, and that's cost you a little bit of money. All of those things, if you present yourself as though you are a business instead of bumbling along, flying by the seat of your pants, regardless of whether or not you've actually made a profit yet, the IRS says, if you look like a business and you act like a business, we expect that the first couple of years, most businesses are not going to make a profit because they've got to get their name out there. They have to get customers to come in and buy their services or their products. We understand that. So whether you're actually making money or not is not when you start being a business. You start being a business when you, okay, everybody, take your hat out, your invisible hat. Mine happens to be black with a fedora looking thing. We're going to put it on. All right, everybody's got yours on? Mine magically turns to pink with purple polka dots when I put it on. See? Isn't it fancy? When I put my business hat on, and again, I have the intention of making a profit, as soon as you make that presumption, that motive, then you're in business. It's not when somebody starts paying for your goods or services. It's when you start spending money to get to the point where you can start making a profit by bringing things in. One of the ways that we look like we are a business, because we've got our business hat on, is that we have a separate bank account and a separate credit card than our personal. Yes, a separate one. I realize that as an artist, especially a self-employed one, that the money that you're bringing in is what you are doing, but you're working for your business. And it's really the business that's bringing the money in. So you need to separate that out so the business looks like it's running as a business. And when you need money to pay your car payment or your insurance or buy some groceries, right? You need to then transfer that money from the business bank account into your separate personal bank account. That's the number one thing. There's an IRS term called co-mingling, and you want to make sure that you don't do that. You keep them separate. Another way that you can make sure that you look and act like a business is by getting an EIN, a employer identification number. It's free from the IRS. Just go to the irs.gov website and search for EIN. Takes about 6 minutes. And it's, like I said, it's free. And what that does is allow you to, oftentimes, banks now, if you do want a separate business bank account, they may require you to have an EIN. So having that says to the IRS and to the rest of the world, I'm a business. Look, see, I've got my hat on. In addition to that, you would want to be able to prove up that you've got this income coming into your business, and the deductions that you want to take on your tax return are able to be substantiated. What the heck does that mean? Basically, that means I can prove that I had this deduction because I've got a receipt, I've got an invoice, I bill my customer, and when I do, I give them a receipt. I can maybe track how much money is coming in to my business because I have a business PayPal account or a business Venmo account. And make sure that, again, when you're thinking about alternate payment options like Venmo or PayPal, that you have the business version of it. Again, well, first of all, it may be against their rules and policies to buy and sell things through using the personal version. But in addition to that, again, you want to present yourself as though you are a business. You want to keep that business hat on. And by tracking it in their business section, that helps you substantiate the money coming in as well as the money going out. There's several different things that we want to make sure that we keep in mind when we're talking about record keeping, when we're talking about bookkeeping. And yes, I know when you first hear that, you go, oh, that's not me. I hate numbers. I just don't want to do it. But when you really think about the fact that your business has given you the opportunity to actually make income from that thing that you are absolutely passionate about, shouldn't you pay it a little bit of love by doing the one thing that the IRS starts out with, which is record keeping? All you're doing is you're paying attention now to your business. And just like, think about a little puppy. We just got a little puppy. He's so excited, and we're petting it, and we're throwing the ball, and we're giving it a little bone, and he's so excited to be with us. And if we continue to really pay attention to little Spot, then he's going to grow up and he's going to love and adore us and really be that companion for us. But if we ignore this little puppy, then he's going to be starved for attention, and he's going to find some ways to maybe get that attention from us, maybe chew on our shoes or jump over the fence, trying to find that attention. Well, that's somewhat similar to your business. If you don't pay attention to it, it's not going to give back the love and appreciation that you need in order to, again, have it be the vehicle that you can make some income doing that thing that you are so passionate about. So keep that in mind while we're working through these things that you need to do in order to give it that attention. So the first thing, of course, is to keep those business expenses and the personal expenses separate. One of the biggest things that I see overlapping is meals. So if you go out to McDonald's and you don't keep separate accounts, then when the IRS looks and sees that there's McDonald's that you've accounted for in your business and you want to take it as a business expense on your tax return, as a business deduction, they're going to say, well, we don't know, because you're not keeping good records, at whether or not you are going out for a meal for yourself or for your business, because you're not keeping good records. And if you don't keep those good enough records, then you really don't, they're going to have the potential to disallow every single McDonald's. And well, that means that you'll end up paying more in taxes because you don't have that deduction. The second thing you should really have is a spending plan. Now, some people call it a budget, and that's not a bad word. It's really not. What you need to do is think about all of the money coming in, that's the revenue, and having all of the expenses that you might incur over the course of the next 12 months. And the reason that we're going to look all the way out for 12 months is think about I know I often use Zoom, and if I pay on an annual subscription instead of monthly, I actually get a discount. But I've got to think about the fact that in October, I'm going to owe a little bit bigger chunk because it's only once a year. And if I'm not prepared for that, then I'm not going to really think about it enough in advance. And then, oh my gosh, all of a sudden it's here and I've got to scramble to try and figure out how I'm going to pay that expense. So having a spending plan really helps us keep focused on the future and not just what happened in the past. So the spending plan is future focused. A budget only focuses like on the next month that's coming up. I want you guys to have a spending plan so you can think about how much money you need to generate in sales, right? How many gigs you need to get, how many pieces of art you need to sell in order to make sure that those expenses are covered. And the number one thing that I want you to think about is to pay yourself, right? You are the reason that this business is in existence at all. Now, what does it mean to pay yourself? As a sole proprietor, when you pay your taxes, you're going to take that revenue that came in when people pay you for your art or your music, the money that's coming in minus all of these expenses that you're going to have on your spending plan. Those expenses range everywhere from, again, the recording studio costs plus your cell phone, your internet, if you have a studio rent, those types of expenses. And then you're going to pay tax on what's left over. I want you to start thinking about you first. So if you know that you're going to have to pay some tax on what's coming up, when you have your spending plan in place, you can actually have a better idea of what that's going to look like. And you can see, okay, I'm going to have $500 left over after all of my expenses this month. Oh, but you remember Lisa said that I need to think about what's going to happen in October. So there's a couple of things like that. I want to make sure that I set aside some money for things that are going to happen in a few months from now. So maybe I've only got $450 left over. That's what I'm going to pay myself. And you really need to think about paying yourself first and then looking at the expenses and saying, is there something I don't really need because I want to pay myself more? Or maybe I'm going to pay myself a little bit less and I'm going to utilize a service that helps me do my social media marketing, because that's going to give me time back into my business so that I can actually get more gigs. So sometimes it's a give and take on how much you pay yourself, but you should really be focused on that first. Profit First is a book that is written by Mike Michalowicz that really goes into thinking about this philosophy a little bit more. There's a lot of details about the Profit First methodology that we're going to talk only briefly about right now. The biggest one is that he suggests having a separate bank account, maybe a savings account, for the taxes that you know that you're going to owe every quarter, right? So as you are earning the money, to go ahead and put that tax into a separate bank account so that you don't think about spending it on something else. Believe me, I have a little bit of a hard time thinking about not spending money on things like AppSumo.com. Oh my goodness, I am a taco fiend over there. So those shiny objects that sometimes you're looking at, well, if I've set that money aside for my taxes, my quarterly estimated payments, then I'm going to make sure that I don't accidentally spend it on something else. Then you want to make sure that you're doing your record keeping very, very consistently. Why? Well, do you have to have it for taxes until the end of the year? No. But remember that the number one thing that the IRS wants is complete and accurate books. And complete and accurate, especially we found this out in 2020 when, in order to apply for a PPP loan, you had to have what? Financial statements. Oh my gosh. So having them done on a monthly basis helps us ensure that we can have that very, very easily. Our bank statement comes out once a month. We should easily be able to make sure that we reconcile against that. And our same with our credit card statement. Venmo, PayPal, everything comes out once a month with a statement that says, here, this is what went through our system. Did you record it in your system? That's the reconciliation piece, right? So when we're thinking about recording income, we want to make sure that we're recording the payments that we've received. And if we've done some work for somebody and they're going to be paying us in little pieces, we want to make sure that we record that as an invoice. On the expense side, for our business, we would want to make sure that all of the receipts and invoices that we're capturing are kept somewhere. Now, you could keep it the old-fashioned way and maybe an organized version of a shoebox, but nowadays you've got systems out there that can really help you do this a little bit more effectively. At very minimum, you could take a picture with your phone and save it to your OneDrive or your Google Drive. You could upload it into something like QuickBooks Online or Xero or waveapps.com. Those are 3 systems that you could use. Or even you can attach it as a link if you've got something like a spreadsheet that you're using. Now, remember I told you we needed a spending plan because we want to be focused on the future. But at the end of the month, as you're kind of doing your record keeping, you're going to want to compare what you actually spent with what you said you were going to spend. That way, you can adjust your spending plan as you're moving forward so that if you find a better deal, because if you pay for 2 years of Zoom, you get even a bigger discount, well, you would want to make sure that you adjust your spending plan accordingly. Now, remember that there's so many different ways that you can keep things. Some of them are quite automated. Again, things like QuickBooks Online or Xero, Wave app, and FreshBooks. Those are all very automated, and they're designed to help businesses really do their record keeping effectively. But you don't have to be that sophisticated. You can do it on a spreadsheet. You could do it with a pen and paper. It takes a little bit of time to do it that way, but you can, as long as you do it very periodically so that it is complete and accurate, and you look like you're doing it as a business. So make sure that when you're saving those receipts, that, like I said, you can take a picture. There are some rules and regulations that the IRS has around keeping receipts. And in an ideal situation, you would have substantiating documentation. Oof, big IRS word there. Substantiating documentation for every single expenditure. Sometimes, though, it's a little difficult, even though you've started to get in a really good habit of using your mobile device to capture pictures, but maybe you miss one, right? There are some rules and regulations out there about different levels of what you need to keep track of. Right now, if the expenditure is under $75, then you don't absolutely have to have a receipt if it's not lodging. If it's lodging, they said, doesn't matter, we want that receipt. But remember, it's not for the IRS. This is for you as the business owner with your hat on, okay? That you want to make sure that you have all of the records so that you can grow your business. Remember the puppy? You want to grow your business, like you want to pay attention to that puppy. And by having receipts for everything, that helps you keep a little bit more focused on your business. Again, money coming in is the revenue, and that's what drives what will end up being your paycheck. The money going out, that's the taxable deductions that you might end up having. And we want to make sure that we keep them organized so that they're not just flying out the window willy-nilly. One way to do that, again, is with the spending plan. And if you're a little confused about, well, I don't know what categories to even think about on a spending plan, maybe you want to look at the Schedule C of your 1040 tax return. Part 2 has a listing of all of these categories that the IRS is going to ask you about anyways. So at a very minimum, you could put those in your spending plan. And if you're going to use a more sophisticated version of something like QuickBooks or Xero, you might want to use these category names on the Schedule C to help you keep your chart of accounts a little more organized. It's not absolutely necessary that you use these names by any means, but it also helps you think about some things that you might have missed in past years. Things like office expense. Remember that your things like, your business cards, right? That's an office expense. Paper and pens, of course, are some generic office expenses. But let's go back to those TALA dues. If you're a member of Texas Accountants and Lawyers for the Arts, those dues are a tax-deductible business expense. So is, once we can finally get back in person, when you can come to one of these live seminars that we're going to be putting on, then going to that event has mileage that you're going to want to track. So make sure that you at least glance at Schedule C so that you've got a really good handle on what kind of things that you're going to want to track. Again, your meals, your mobile phone, your internet, your mileage, and there's applications to keep track of almost all of these things, but again, you can do it a little less sophisticated. A pen and paper with a little notebook in the glove compartment of your car. Another way to keep track of miles is utilizing your calendar. You know that you're going to be at a gig on Friday. So on Friday, in that you've marked off on your calendar, just write down how many miles it was. That way you can keep track of them on a regular basis. Again, so that it's not trying to recreate this at the end of the year. IRS wants you to do it all the time. And again, it's not just the IRS. It's for you. You want to feed your business. One way to make sure that you've got all of the transactions in your record keeping is to do this thing called reconciliation. Ooh, another big word. And it sounds a little intimidating. But really, the only thing that it means is that I've got my bank statement over here, and I've got my record keeping. Maybe it's just my spending plan in a spreadsheet. Maybe it's something like QuickBooks. But I'm going to make sure that everything that is on that bank statement or credit card statement is in my accounting records. And then on the flip side, I'm going to look at my accounting records and see if there's anything in there that was not over here. And what I'm going to ask is, if there's something over here that wasn't over here, why? Well, maybe you took out $50 in cash out of your business bank account and you spent it over here on your business, and you didn't keep the receipt. Well, all that you would have on your bank statement is a $50 withdrawal. Over here on your business ledgers, we're going to want to see where that $50 was spent. That's how we can make sure that they reconcile, that they go back and forth with each other. And one of the really important parts about that is to make sure that we didn't double count something in our records and that we didn't forget something. It would be horrible to have forgotten something and then we didn't get that tax deduction. It would also be a little bit off if we didn't include some income that was on that bank statement. So make sure, and if you get cash for as payment, make sure that you deposit it into your business bank account. And then if you need it to buy margaritas for Lisa, right, you take it out of the business bank account, put it into your personal bank account. You can transfer it online, that's fine, but make sure that there's a paper trail. And then take it out of your personal bank account and then go buy me margaritas. One of the things when you reconcile, you'll also, again, want to update your spending plan because we really want to be focused on the future. If we're just looking back at the bank statement or just doing a tax return, the only thing you're doing is looking in that rearview mirror. And remember that a rearview mirror is only like 6 or 8 inches. The windshield is looking out down the road. The rearview mirror makes sure that nothing is going to bump us in the behind. And, occasionally we want to see where we came from so that we can learn about where we need to go next. But it's really the map of our future that we want to focus on. And a spending plan, as opposed to a budget or just doing a tax return at the end of the year, is really the key to getting to where we want our business to grow fast. Spending plans can be done in something sophisticated like QuickBooks Online, but they can be as, again, simple as just writing down how much money you expect to come in this month and what your expenditures are, plus keeping in mind those things that are out there in the future. Because why? We want to focus on making a profit. We're here to, yes, be passionate about our art, about making music, about creating for the world to enjoy. But it's not just that. Because we have our business hat on, we really do want to make a profit. That's the money coming in, our revenue that people want to pay us for our art, minus all that money that has to go out, the cell phone and the miles and the occasional meal. And don't forget, most importantly, your paycheck and the taxes that are associated with that, right? That's the profit, and I want you to have as much of that as possible. There are a couple of free events that I put on. Every Thursday at noon, I have a Zoom where we do business coaching. You're welcome to join up for that. The first Friday of every month, will be live pretty soon, but also on Zoom and Facebook Live, some events. So feel free to go on my website, visionating.com, and sign up for those. And I'm going to have Elisa come back in and tell us a little bit more about TALA and how great their matching program is.
Thanks, Lisa. That was excellent information, and I always learn something every time I see a presentation by you. So thank you so much for going through all that for us. We're going to take questions in just a second, and we do have some. Just quickly, I wanted to let everyone on the call know about Texas Accountants and Lawyers for the Arts Matching Pro Bono Program. This is a program where you're able to talk to a legal or accounting professional for free, basically pro bono, which means free, if you financially qualify. So this is mainly for lower income families and artists who are trying to monetize and make a living from their art. There's some sample assistance topics that are on the slide of some things that we do. That's not the only thing that we do. If you find yourself in need of something very particular and need accounting or legal advice, please remember us. The financial qualifications for one person are that you need to make less than around $37,000 a year. That limit or cap goes up based on how many other people are in your household. If you have two people, if you have a child or you're married, it's a little bit over 50,000, and then it goes up from there. You can find those numbers, and if you may qualify for that pro bono matching program on our website. And again, we're happy to answer questions about that program individually also. And did you want to, I guess, Lisa, do you want to start taking some of the questions?
Absolutely.
All right, let me get over here. Ron, yes. I have no cursor. Oh yeah, I do. Sorry. All right, let's see. I've got a question about how would you account for prize winnings from an art contest?
Okay. So you exchanged your art for a prize, basically. So that would simply be regular revenue that it would just be revenue. So there's really no difference between it and if someone came into your studio and purchased your art.
All right, I've got, at what point in your business is it best to begin paying yourself? This is a really popular question.
As soon as absolutely possible, right? So again, you really do need to be focused on paying yourself first. What that will do is kind of two things. One, it will help you really focus on the expenses that are absolutely necessary for your business to run. Let's say that you are a painter. Well, in order to paint, you gotta have, paint, right? And brushes. So those are two expenses that you know that you're gonna have to have. But do you absolutely have to have an easel that's made out of teak wood that costs $7,000? Or can you, for the time being, get away with one that's made out of cardboard because it's recyclable, and it's only $7, right? So maybe you would paint a little better on the different easel, but for right now, it's more important to make sure that you are paid. And again, having a spending plan helps us really get focused on what expenses we actually have and which ones are more important to have. Sometimes we think, we have to absolutely have this in order to run our business. And then we can find different ways. Let's go back to my Zoom example, right? Right now, yes, I have a Zoom that I pay for. But guess what? There are free versions of Zoom that I can work with, right? Do I have to make some adjustments? Maybe, but I'm willing to do that in order to pay myself first. The thing that I want you to keep in mind, though, is as it doesn't matter whether you're paying yourself or not, if you have a profit, then you will owe tax on that profit, regardless of whether or not you are taking money out of the business. Remember that as a sole proprietor, a self-employed person filing a Schedule C, that when you take money out of the business, that is a non-taxable event. That means that you can take all the cash out of the business and it doesn't matter how much you take out or how much you leave in. The tax you're going to pay is on the profit, and the money you take out is going to be your paycheck. And I use that word really loosely because the IRS and the Department of Labor have a definition around the word paycheck, and it's associated with the Form W-2. If any of you guys have worked for another employer, you know that you got a W-2 at the end of the year. Most of us that are self-employed get 1099, used to be miscellaneous. Now, as of 2020, it's a 1099 NEC. But just because you don't get one doesn't mean that you don't have to count that revenue coming in. You do. But make sure that you're counting the tax not on the money that you're taking out of the business, but on the actual profit. So pay yourself first.
So, and to follow up on that question, there was a question about paying yourself as an LLC. Is there anything that you should remember or anything different if you have an official LLC created or not?
So the answer is, if you are filing Schedule C, which means that you are the only owner of this business and you are self-employed, meaning that there's no other company structure, then having a limited liability company does not change the fact that you're going to file a Schedule C, and paying yourself, if you file a Schedule C, is exactly the same. Doesn't matter whether you have the limited liability company or not. Little caveat there, if you have an S election or a C election with a limited liability company, or it has more than one owner, then things change. But for this discussion, if you are filing a Schedule C, paying yourself is exactly the same. You take out an owner distribution, which is a non-taxable event.
Do you recommend a bank account or credit card that's an official business account, or can you assign a personal card to use for your business?
So in past years, it's been, the recommendation is to have a business bank account and a business credit card, but you could kind of get away with a personal one. Once the PPP loans came along, a lot of banks wouldn't even take an application from you if you didn't already have a business bank account with that bank. You're a business, remember? Remember our hats? Put it on right now, everybody. Elisa, put your hat on. Thank you. All right, when that hat is on, you want to act as much like a business as you possibly can, which, guess what, means that it's better for you to have a business bank account because that makes you look more like a business. Is it absolutely required? Well, PPP, maybe, right? If you are audited by the IRS and you have a business bank account versus another personal one, they would go, okay, yeah, you're looking a lot more legit. Your hat fits really well, right? So again, you want to look and act as much like a business as possible. And one of the ways to do that is to have a business type account.
So switching gears a little bit, how do you keep records for your business meals?
So on the receipt, the IRS has some qualifications about the business meal on whether or not it can be qualified as a business meal. And there are several different types of meals. The easiest one is travel. So if you're outside of your tax home for business purposes and you have a meal, you just write down, well, this is what I do. I write down on the top of the receipt why this is a business meal, who was attending the meal, like maybe that margarita that we talked about earlier, you want to take Lisa out so you can learn more about what business coaching is. You've heard that it might help your business grow and you want to know more about it. And so you take Lisa out for a margarita so that she can explain all of that to you. Well, that could be a business meal. And so you would put down Lisa business coaching. Obviously, on the receipt, it's got the date and the amount as well as the location, right? When you're traveling, maybe you just need to put that it was a conference in New York or some kind of show, and it's already got the date and the amount, and that's the important part. So when we're talking about meals, you want to make sure that it's a business purpose and that you've got who was there, because in order for it to count, the owner or an employee must be present. What else do we have?
Moving on, we've got someone who has to charge their client sales tax, and she's asking if she has to charge sales tax on the entire project, or can she itemize the invoice so the client pays only for the final product. I think this question is if you can include sales tax in your final price without breaking it out.
And the answer is technically you need to show it as a separate line item. Although sales tax isn't exactly part of the conversation, when you are recording sales tax in your accounting records, you record the sale of $100. Now, of course, in cash, you're going to get $108.25 in the state of Texas for most of the places that we have here. So what do you do with that other $8.25? Technically, you need to put that on the balance sheet as a liability, something that you owe to someone else, because you owe that money to the state. So if you include it in the total price of your project, then your gross revenue is going to be lower because you still have to break that out and put it as a separate line item owed to the state. Does that help at all?
I think so. I think that's what she was asking. So I think the answer is you could tell the person the final price is just one price, but you are still going to have to break it up for your records.
Exactly.
The next one I have is, how do you make sure that you're paying into Social Security?
So when you file your 1040 tax return, one of the things that you're going to have to do is calculate self-employed tax. And that number is going to go on page 1 of your 1040 tax return. And that's how you get Social Security paid in. It's paid in on your 1040 tax return.
And then I have recommendations for a good app for creating a spending plan.
So QuickBooks Online has a budget section to it that is fairly elementary, and you would have to keep up with that really closely yourself to make sure that you're thinking about those things that are really out there in the future. In addition to that, it spends things based on your profit and loss statement and not necessarily when cash is coming in. So it's out there, but it's a little tricky to use sometimes. I just use a spreadsheet myself. I utilize the same categories that I have in my chart of accounts, and then I just put January, February, March, and on out, and every month I update that so that it's a rolling 12 months, and I just do it on a spreadsheet myself.
And continuing on to talk about tools, what online websites do you recommend for bookkeeping, and do they have any advantages or disadvantages?
So the top ones for the sole proprietor are QuickBooks Online, Xero, that's spelled Xero, and Wave Apps, WAVE-APPS. Wave Apps is free to use. They make their money by charging you money to pay your bills and for other people to pay you. But it's all integrated, and that makes it really nice. And it is free. And it's not all that complicated to use. The most popular one is QuickBooks Online, and some of the advantages to it is that it has a really, really slick application on your mobile devices, especially because you can like snap a picture of that receipt that we talked about, and it automatically gets it put into the system with a copy of that receipt. And one of the things that I mentioned earlier is that you could do something like take a picture and save it to your OneDrive or your Google Drive. The IRS does accept PDFs and JPEGs as substantiating documentation. So if you are keeping it electronically, you do not have to keep the paper copy. Yay, because, well, I'm lazy and I don't want to keep that piece of paper around in some shoebox or piling up in my garage. So that's really nice. Again, the top three again are QuickBooks Online. That's the most popular. Xero is also out there, and it's got some features fairly close to QuickBooks Online, although a little bit more expensive at the lower end. And then Wave Apps is free, so you might want to check that out.
I've got a couple more. So if I bought tools, paints, painting supplies, easels before I opened a business account, can I show this money to the IRS?
The answer is absolutely. So remember that as soon as you decide that you want to have a business with a profit motive, then you are in business. And think about this, right? Let's think about a restaurant. When it first starts out, it has to have a place that people are going to come, which means it's starting to pay rent on day one. Are people coming in and buying anything yet? Well, no, because they didn't buy the food yet, right? So they got to get the rent first, and then they got to buy some food, and then they got to hire a chef, and then they got to hire some wait staff. And by the time they finally get everything all together, it's 2, 3, 4, maybe 5 months down the road. Well, when they started out back 5 months ago is when they could move forward. And just because they don't have a business bank account yet doesn't necessarily mean they didn't have a profit motive. So it's as soon as you have that profit motive that business hat went on, and you get to start keeping start getting those expenses. So things like if you want to do a doing business as a DBA, well, the expense to get that DBA, you probably have to, in a lot of banks, you have to have a DBA or an LLC before they'll allow you to open your bank account. The cost of that, well, clearly you don't have a business bank account yet because you got to have this before that. And that cost is definitely a tax deduction. In addition to that, even if it wasn't, it would still be part of what you need to get your business started. So yes, those startup costs, or maybe maybe you've been in business now for 3 years and you go, I should finally get a business bank account, right? So all of the costs that you've had up to today still are deductible, even if you don't have a separate business bank account.
Can I ask a question of Lisa that I've been thinking about while I was listening to your presentation? If you have a credit card statement or a PayPal or a debit card that shows that something was paid, but you don't have an actual receipt, does that count for records or not?
It does not.
Okay.
Statements don't show enough of what it was you purchased. Think about if you go to Costco and you spend $100. Well, all that's going to show up is a Costco line item on your statement that says $100. But it doesn't tell the IRS or you that you spent $50 on office supplies and $50 on a new printer. right? So you need the receipt in order to substantiate the details behind that $100. So,
So it's
the
always good to get the actual receipt and keep it.
And keep it. So let's think about the question about these applications, right? A lot of these applications now, QuickBooks Zero and Wave apps, all bring in bank information directly from your bank. And you might think, oh, this is wonderful. And they even suggest what category to put it in. Now, sometimes it's not as accurate as one would hope, but it's learning. Machine learning and blockchain and AI, all of that are in play. And it's going to get better and better. So you're thinking, well, if it's going to do all that work, I don't need to save my receipt. You see, that bank transaction doesn't have enough substantiating evidence behind it to prove enough to the IRS what that expenditure was for. Nor does it have for you, right? And believe me, if you wait too long to do your reconciliations and your record keeping, you're not even going to remember what it was that you bought at Costco 3 months ago for $100, unless you've got that receipt.
Questions. And I've got one is, how do you put fellowships on your tax return?
Fellowships, meaning?
I believe that they are talking about art fellowships where someone may pay you to do a residency or come out and make art or learn something for a specific program.
So if you are being paid with a W-2, then you would not be putting that in your business because that's you personally. If you are being paid with a 1099, then you would do it just the same as the winnings, the prize winnings that we talked about earlier. Now you might, for your own record keeping, you might want to have one line item called sales if you're a painter and you're selling your art, and one line item called fellowships so that you know that fellowships is paying you $10,000 this year and that you're getting $40,000 this year just from the sale of your regular art. So you might want to split those out.
And a question again about startup expenses, and is there a limit to that?
Startup expenses, there's no limit to the amount of startup expenses that you can have. So there are two different types of startup of costs that are incurred at the beginning of when you start a new business. There are organizational costs and startup costs. Most of the organizational costs are if you decide to form a limited liability company, then that cost would be part of that organizational cost. The startup costs are from the time that you start the company until the time that you open your doors. When we think about that restaurant, it would be that grand opening, okay? From that time to this time, there's going to be rent. There's going to be the salary for the chef. There's going to be some cost for some food that you have to buy in order for the chef to decide how to make the next biggest thing that's going to be on the menu. So there's going to be all of these startup costs. Now, the limit that you might be thinking of is right now, you can immediately expense for tax purposes $5,000 of startup and organizational costs. So, but that doesn't mean that you can't have more of them. It just means that you can expense $5,000 right now, and the rest does have to be amortized over time.
Okay, let's see. I'm going to pull this up. This is something that wasn't on your slides, but we have a few minutes, so I know you know this answer, so I thought you could give us all a refresher on the home office deduction.
Certainly, certainly. So the home office deduction, you actually have two different versions of it. You've got the simplified version and you have the more complex version. Either way, in a home office deduction, you have to have a dedicated space. That means it can be just some square footage that you sit on the floor with your laptop, and that's the space that you always do your work. It could be a room, like my home office is actually a room with a door and some windows, but it doesn't have to. It can just be a space, but it does have to be dedicated. In other words, you can't use your dining room as both your office and the place where you have your breakfast on the same table, because the IRS says it must be dedicated. Once you figure out what that space is, you figure out what the square footage of that space is, and the simplified version says, how many square feet do you have? I have, 50 square feet. And then there's going to be one line item on Schedule C for this simplified version, and it's the number of square feet times $5. And yes, that's for the entire year. But when you have that off, when you use the simplified version, you don't have to keep up with any documentation around that, except maybe you might want to take a picture of your space so that you can substantiate that it's actually dedicated. When you use the more complicated version, you have to keep records for every single electric bill and every single repair bill. And, if you've got your landline and your cable and all of these things, right? Everything, especially those repairs, and your mortgage payment or your rent payment, you actually have to keep records of that. And then based on a pro rata of the percentage of the square footage that you said is dedicated to your business as compared to the entire home, then you multiply that times those all of those records that you've kept. So the complex version means that you've got a lot more record keeping to do in order to substantiate it. So you should really consider which one is more appropriate for you.
And then Michelle on the chat has made a note that there was a class yesterday specifically on the home office and vehicle deductions, which is great. I did see that in the program. So if you did not attend that class, you may check on smallbizaustin.org and see if that may be recorded, and it may give you a more lengthy discussion about the home office deduction.
Awesome.
Then I think we've got a couple more. This one, they keep coming in. They work part-time at a gallery and they receive the 1099 NEC. And they're asking about that income under their art business or personal income, or how is that accounted for?
So if your business is in art and working at the gallery somehow promotes you as an artist, you could put it under that Schedule C. If you are not an artist, let's say that you are a musician, but you work at an art gallery part-time, then you would actually have potentially two separate Schedule Cs, one as an art gallery worker and one as a musician. So it would depend on whether or not it fell in line with what it is you do in your business, or if you really have two business hats. Oh my gosh, I have seven different business hats. Today's, again, is pink with purple polka dots.
I'm going to this last one, and this is a tricky question that we get all the time. I don't know if you've got any quick comments on it. I will say that from a legal standpoint, when you determine that, it goes into a lot of individual factors about your business and how you're conducting your business. And so I don't know if there's a one size fits all answer when you should get an LLC or if you should get an LLC. I know that Lisa covered this a little bit on the tax presentation. I didn't know if you had any last comments to add to this question.
So there's almost 3 factors when considering whether to have a limited liability company or not. I'm not a lawyer, so I'm definitely not going to give any legal advice here, but that is one of the biggest things to think about when considering having a different entity structure like a limited liability company, is that it could potentially help you limit the liabilities, limit your exposure to having someone sue you. And so that might be a factor. The second factor is how many owners you currently have and whether or not you want the idea of having some owners in the future. Having a limited liability company or another entity structure type, if you think that you might want investors, could potentially be the way that you want to consider. And the third thing is, of course, the tax side of it. Now, a limited liability company is a state-only structure. And so the IRS doesn't even recognize it as something that they can tax. What they say is, by default, the limited liability company that has one owner will default to a sole proprietorship, meaning that you would file a Schedule C. If that's the case, then it doesn't matter whether you're a limited liability company or not, your taxes are going to be exactly the same, with the exception that at least in the state of Texas, if you are a sole proprietor only, then you don't even have to file Texas franchise taxes or the return. If you are a limited liability company, now you're subject to actually filing the return. Now, you may not have to pay any taxes, but you still have to file the return. So there are some more administrative costs to having a limited liability company, even though your federal taxes may not change. Now, you do have some other options, even as the only owner, but you would want to really ask a tax advisor about what that looks like and whether or not it makes any sense for you to make an S election and have an S corporation, or if you should just stick with the sole proprietor and a Schedule C. One other thing to note is when you're thinking about liability, right? One other way to either enhance it or instead of a limited liability company or other structure is to buy insurance. So you can get insurance for your business to help cover if you are sued. Then instead of them going after your personal assets, then the insurance company would step in and help mitigate that. So there are a number of different things to consider. Remember, it's both legal, ownership, well, 3 things: legal, ownership, and the taxes on it.
Great. I think that concludes all of our questions. Those were great questions too. And I think that's it for today, unless you have any parting words, Lisa, for us.
Well, just a reminder that Texas Accountants and Lawyers for the Arts is a fantastic resource, and we really are there to help you guys run your businesses better. And remember that I do a free business coaching every Thursday at noon, visionating.com. You can go there and sign up.
Sounds great. I have your email is now at the bottom too if people have questions. And I think that's it. Just remember, in City of Austin, Small Business Week continues throughout the week, and you do not have to be in Austin to take advantage of the programming. So you might go to Small Biz Austin, Austin.org, and check out the seminars for the rest of the week. And if there's something on tap that could help you, please join in. Otherwise, we've got legal clinics that we do every quarter. Our next one is in July. So as questions build up, or if you have legal questions, just go and check our website and check out when the next one is. And those are individual one-on-one conversations with an attorney, and there is no financial requirement for that. So you might just make a note on your calendar if you have questions, legal questions to ask. We do that once per quarter. I think that's it for today. If you're an inventor and you're interested in patents, we'll be on again at 6 p.m. and that information is also on our website. Feel free to join us with 2 patent attorneys from the Dallas area. So good afternoon.